Hey, everybody. Thanks for checking into our latest TDR Small Cap Sunday podcast. I am your host, Shad Dales. All right, this week, look, we've pushed out over 65 different small cap companies over the past 2.5 months. Are you aware of all of them? If not, this whole show here tonight is to give you a refresher of some of the companies that we've done in the past that you may have forgotten about. So with that, we're going to highlight 4 companies here tonight with myself, along with TDR lead financial writer Bill McNarlin, on some shows that we did before to make sure that there's a few stocks that you may have missed that we think they're worth watching and looking and reading more about. So here they are here on tonight's TDR Small Cap Sunday podcast. Crimson Wine, who started back in 1991 and operate in the Napa Valley. And on land alone, that's valued at $450,000 per acre, and they have 1,000 acres of vineyards. And I think last I checked, they did $72 million in revenue last year. So, Bill, walk us through on how valuable this company is.
Yeah, so first of all, we have to talk a little bit about accounting. So in the US, everything is GAAP based, which is the
Okay.
type of accounting. The rest of the world uses mostly IFRS. But why does that matter? I'll give you an example. I remember about the third week that I was in accounting school, the professor easily explained why GAAP accounting has a flaw when it comes to land value. And the original railway companies, when they were in the US and Canada, they had to buy huge amounts of land to be able to put the railway through. On their balance sheets, the asset value of the land is the original price they paid for it maybe 125 or 150 years ago. It
Okay.
doesn't go up in value. So when you look at their financial statements,
That's crazy.
you have no idea how valuable their land is. Yet the railroads had some of the most beautiful, valuable land in North America. So I had to do some digging when you're looking at a wine company. What is the true value of their vineyards?
Yeah. $450 million, it appears right now, if it's based on 1,000 acres and $450,000 per acre.
Yeah,
That's
yeah, and we can go through the math on that, how it compares to their balance sheet. So on their balance sheet, when you look at it, you find out that originally all their land and equipment cost 196
okay.
million,
Okay.
but they depreciated it down to 116 million. That's
Okay.
because you get a tax credit for using depreciation. So that
Gotcha.
makes sense to do. But does land go up in value or does it go down in value through time?
Goes up.
Yeah. So what's interesting, no one knows what their land is worth. All we know is they have a
Yeah.
1,000 acres in Napa Valley. So I went to inquire at a real estate agency to find
Okay.
out, and I got 2 estimates. On the low side, someone said it could be worth 450,000 an acre. On the high side, I got a quote of 750,000 per acre. So that tells us that what is showing as 116 million on their balance sheet could actually be worth 450 to 750 million
Yeah.
dollars.
It's a half a billion.
So
Big
what's their
money.
market cap? Think
Yeah,
about
no.
it. Their market cap, the stocks come down. Technically, they're not a small cap now because they've come under the 200, but
Yeah.
they're at 123 million. You could potentially get 450 to 750 million of land. And the other neat thing is they have inventory of wine. They're showing $58 million worth of wine in their inventory as well.
Yeah. So how do you factor in that land then? Like, go back to the whole gap accounting. It's just like when you sell a company, you could probably see the value of a company with that kind of land, but how does that benefit you right now as a shareholder based on land that you're sitting at that you have not sold? But yes, there is great value to it.
Yeah, so how could this be monetized? One, it can be monetized if people start to understand this so that they don't have research coverage. There's no one's made a comment about this company since 2020
Hmm.
on Seeking Alpha. So if they had a way for people to be aware of this, that's one way it could get monetized in the stock price. The second one is it could be through a merger and acquisition. There's a lot of other wine companies that are looking to buy assets.
Yep.
So if they got bought out, you would have a big increase in value as a shareholder. Or if they decided to sell some of their land for some reason and distribute that to shareholders. But this is an example where a company needs some help in getting their story out.
Yeah. Well, let's take a look. First off, what's the ticker symbol and what do they trade on?
Yeah, so they trade in the US, CWGL, and there was liquidity there. You can make purchases easily daily to get in and out of this name.
And they're on the OTC.
Yes.
All right, well, let's go to the charts now. And first off, you highlighted their gross margin is 46.5%. So walk us through along with what their levered free cash flow is as well.
So when you're looking at getting into a company that's heavy in assets, that's fine, but you don't want it to be a cash drag. So because holding on to real estate costs money, we all know that every year if we own a home, we have to put money into it. So this company, they have, as we mentioned, they have revenue of 72 million, of which they have gross margin on profits of 46.5% off. After they put money back into the properties through capital improvements, their free cash flow last year was negative 3 million, and it was negative 80,000 the year before. So it's pretty close to even. It's a
Okay.
break even play while you're waiting for something to happen with the real estate.
Okay. And what's their net income?
Their net income was 3 million last year after all depreciation. So why is there a mismatch between leverage free cash flow and the net income? It's
Good
because
question.
they put some capital improvements into the property to maintain it and to improve it.
Okay. What's finally their credit score? I know you always bring that up, so that's important.
So this is interesting too. Credit scores aren't always perfect. It shows as being 2.4. So that's a bit of a yellow flag. And that's because they have negative free cash flow a little bit. But credit checks don't include asset values. So all that land that we're sitting in. So when I would look at this company, I'm like, can they just get by and be pretty close to zero on the cash flow and wait for that real estate to monetize? And in that
Yeah.
case, it does. So this is an example where sometimes you have to look a little deeper into a credit check.
So established again in what year was it? 1991, was it?
Yes.
So
Yeah.
1991, and you said mergers and acquisitions. Like, is there a lot of mergers and acquisitions that have taken place in this industry recently? Do you know?
There is because there's large conglomerates that
Yeah.
want to purchase assets. This is a long, like when you go out, if you want to increase wine production,
Yeah.
go out and buy, say you and I go out and we buy some land today, and then we start growing vineyards. This is a long time to wait to go through a process. It's a lot more efficient to buy
Yeah.
in. And there's another catalyst too. Napa Valley is very attractive. I
Yeah.
was reading a statistic last year that the average increase in a bottle of wine in Napa Valley, the price went up by $17. When I first read that, I thought the average bottle price coming out of Napa Valley was 17. That was the increase. The average bottle price is now over $100 US coming out of Napa. So it's a premium
Is it
destination
that
for
much?
wine. Yeah, it's
Wow.
over $100 a bottle. The increase was 17, which I thought originally was the price of the bottle. No, that's just the increase.
Huh.
This is a place that conglomerates want to be in, and they have this beautiful piece of land there that's producing.
Hmm. I did not realize that the average bottle of wine is over $100 coming out of Napa Valley. But it's one of the most lucrative areas, obviously, for vineyards. But I think the big takeaway here is just the land value, and a possible merger and acquisition is something that we should be mindful of. But like you said, if you reached out to a real estate firm and basically said that you're looking at anywhere between 450,000 and $700,000 per acre, and they're on 1,000 acres, then you can understand obviously the value in the event that there is a merger and acquisition when obviously factoring in what this company potentially is worth, right?
Yeah, and so our teaching point here is when it comes to real estate assets, you have to go deeper, and there
Yeah,
can be hidden values on balance sheets that people aren't aware of. And we
yeah.
know this is a fact here. I can't find a comment on the internet about this company in the last 4 years.
Interesting. AI company called Perfect Corp, which trades, is it on the New York Stock Exchange or under the NASDAQ?
New York Stock Exchange.
New York Stock Exchange, ticker symbol
Yeah.
PERF. This company, they're actually out of Taiwan. So overseas, yes, but easy to buy knowing on the New York Stock Exchange. So what can you tell us about it? Because as much as this sounds different from what we've experienced in the past when it comes to the quality of your appearance in life, This is wild as to how this is working moving into the future and what they've basically built out.
Yeah, well, first of all, let's talk about the problem. I love AI. I
Yep.
love technology. The problem with AI stocks right now is they're extremely expensive. But this is an interesting find because it's AI based, and we're going to find out that it's actually very inexpensive of a company. So, what does this company do? This company's an AI beauty.
Yep.
You basically can go on to a website, and they'll tell you all about your skin condition or what type of, let's try on some watches, let's try on some fashion. And it's interesting. So, I did a report on my skin. Turns out I have dry skin. They gave me a report card for my skin, and then they can suggest products that I could use. But the real proof in the pudding, Avon is using it now.
Oh, so you did the whole process. Was it easy to use or
Oh
do?
yeah, just recently I've been buying eyeglasses online, and you
Yeah.
can try them online. And I didn't think none of this stuff would work, but sure enough, it's amazing what you can do. And so, like obviously, I'm not that well, I'm not that interested in cosmetics or such. But I tried it out. I took a look. It was so intriguing about all the things that they would tell you about your skin condition and how you could improve it. I was really impressed. But Avon has given a statement saying that partnering with this company, they have 320% higher conversions in sales and 33% higher average checkout on orders when people use the system.
Boom. There
Yeah.
is the statement right there. So
But think
320
about this. Yeah.
so 320% higher conversion, which is 33% higher average order when they use this AI system is what Avon was reporting.
Yeah, well, you think about it, like like someone comes to your home to show you some a lipstick or something. Maybe they only have 12 different kinds. Is this your
Yeah.
color or whatever? They go onto this system and say, okay, here's this perfect one for you. Take a look, try it on. You see your face with it, and they're like, okay, we can order it, and it's going to be here in a few days.
Hmm.
That's why the cart is so much bigger, and the conversion is because people feel the confidence of trying all these different things.
Future's here, isn't it?
Yeah.
Yeah. Let's go to the charts. First up, revenue. What did we see from last year?
$55 million of revenue. They have growth of 17.4% in the last year. 3 years was 21.4. 5 years was 35.9. So this is a fast growing AI company.
What about their 12-month LTM?
And the last 12 months was
Yeah.
17 or $55 million was what their revenue was.
55 million. And any I was going to ask this, any near-term growth catalysts for the company?
They're partnering with additional companies. So I think they have the big ticket with Avon's vote of confidence now, and so just going out to the rest of the world
Yeah.
and saying, would you like to see a system that Avon is putting in place that's increasing their sales?
Mm-hmm.
That's their catalyst.
All in the data right there. That's
Yeah,
massive. Okay. New York Stock Exchange. Interesting.
yeah.
Okay. Dividend. Do they have a dividend or no?
There's no dividend, but we can, we go down to they're reinvesting in their business, coming out with new things. So that's fine. That makes sense as a shareholder. But their gross margin, drum roll, 80.4%.
Now that's a number to stare at.
Because you know
Wow.
what? They've already created the AI. They
Mm-hmm.
add new customers. There's not a lot of additional costs. Now, in technology, there's something called the rule of 40. So the goal in with fast growing tech companies, you're supposed to take your growth rate
Yeah.
and your gross marginal profit, add them together, and the goal is to get over 40%. And that means you're doing excellent. So they have a gross margin of 80, and they have last year their growth rate was 17.4. That's 97% and change. They've doubled the rule of 40.
Do they outline like what their key demo is? Like Avon, who's like using a lot of this AI. Do you know that?
You can use it online.
You
It's
can
all
use it.
available. They have the demos available online. That's how I was using it. I can try on a watch. I can test my skin. It's all there for you to use.
Is it mainly? I'd be curious to see if it was more a male or female demographic that they're going
It's a
after. Or
it's
was both.
it's a female demographic, but also more and more there's a trend, especially in Asia, that more males are becoming intrigued by
Yeah.
cosmetics. Now, and I'll
Yeah.
tell you an example. It's like when the last time I was going through the airport in South Korea,
Yep.
there's much more cosmetic ads with male than we would see in North America. So then there's a trend of growing to the other 50% of the population as well.
South Korea. Did you like it?
Oh, I love it. Yeah, I've been there many times.
Yeah.
It's a fabulous place to go.
All right. Levered free cash flow and net income. What did you find?
Yeah, so last year was 13.2 million of leverage free cash flow. The year before that, they were flat. They were reinvesting into their business. But last year, they had a net income of $5 million. So this and all components that we look at is an amazing tech company that looks to be extremely undervalued. To give you an example, they have their stock price is $2.25. If we took their liquid assets and paid off all their debt, there would be $1.34 available. So you can almost buy half the company with just the cash and liquid assets they have in the bank.
Wow. Another great find. What's the credit score?
5.7. So there's no credit
Impressive.
issues here. You got a fast growing AI company. It's flying, doing very well. Again, just like the first company that we looked at, the exchange, there's just not a lot of people that are aware of this company, and it's on the New York Stock Exchange.
Yeah, it's impressive. All right, moment of truth. I think we got another green check mark coming. Would you
Absolutely.
own this
Yeah,
stock? Yep.
I would buy this. Because I want AI investments, but I'm scared of the valuation of traditional AI investments.
Yep.
But I can get this for 50 cents on the dollar based on the cash that's sitting in the bank.
Switch now to the Northeast at a timber company that operates in both Maine and New Brunswick, as it's called Acadian Timber Corp, which trades with the TSX under the ticker symbol ADN and on the OTC under the ticker symbol ACAZF. Why does this company interest you?
Well, I'm very interested in timber. I used to do some work down in on an advisory basis down in Panama in the teak forest. And what's
Love
interesting
the
about that?
background. Love the background, Bill. I love the way you just roll off the tongue. Doing some timberland work down in Panama. It almost sounds like a song. But anyways, go on, my friend.
And so, what was so intriguing there? There was something I never even thought of when I was down there because it was my first assignment in
Yep.
timber and was about 20 years ago. And I was looking, okay, what is the value of the trees? What is the value of the company? But the big thing I forgot is, timber grows every year. And down there, your actual forest is growing at 11 to 12% a year.
Wow.
And
Okay.
that's so what's interesting. So I found this company. They have 1.1 million of acres freehold timberland in New Brunswick and Maine.
Okay.
Eh, So they have timber. So then I wanted to go see, okay, let's go find out everything we can about the balance sheet and their forests and all these things and see if this is something of interest.
So current market cap size for the company is what right now, along with the amount of outstanding shares?
So they have 305 million of market cap. It's $17.58 a share, and they have 17.3 million outstanding shares. There's volume here. About 100,000 gets dollars worth
Okay.
gets traded every day. So a retail investor can be purchasing into this security.
Tight share float. How has the stock performed recently?
Yeah, over the last year, it's pretty flat. It's had this isn't something that people trade. It's had a 52-week high and low of $15.50 to $18.70.
Yeah.
This is more someone is astutely buying for the asset backing of the company.
Okay. And when it comes to, I guess, validating this company and when looking at their financial along with industry trends, what comes to mind?
So first of all, just looking at their assets, if you took the value of the forest, which I think likely is misrepresented, it's
Yeah.
actually higher than showing on the balance sheet. You have $18.37 of assets after you paid off any debt or liabilities, and the stock is trading for 17.58.
Wow.
So the
So,
assets are completely covering the cost of you purchasing a share in the business.
okay. So let's go now to the charts. Look at revenue and what did they report last year?
Last year was this is interesting, 99.9 million in revenue. I don't know if they're a Wayne Gretzky fan, but they were just under hitting the 100 million.
They did that
Um,
kind of money. Wow.
yeah, 99.9 million in revenue. They had revenue growth last year of 15.9 million and real net income of $22 million.
Also,
Uh,
produce a dividend too, correct?
Absolutely. So the dividend yield is 6.6%. while you're waiting for this forest to be growing and for them to environmentally friendly as they can take out the forest. But what's interesting, they also get a lot of carbon capture credits for the company because of the work they're doing for the environment.
Wow. Levered free cash flow. What'd you find?
Yeah, it was 4.3 million. They're investing in some capex, so they're putting some of their net earnings back in and also paying some dividends. And the year before that was 11.3 million. So everything is covered here. This was a company that if you believe in the lumber thesis, you're
Yeah.
getting it almost for free with their assets, and it's paying you a dividend and it's growing its revenue. This is a real intriguing opportunity.
Give me a honk on that one. Arns in the post-production, give me a honk sound for that. But yeah, what a find this is. So most importantly, I think it's an easy question to answer. Would you buy or at least own this stock?
Oh, absolutely. Turn a dividend. I love the forest industry. I think also behind it too. I think the need for lumber is growing. There's some good trends in place right now. So I think this is an excellent business.
Globex Mining, they're based out of northern Quebec, trades on the TSX under the ticker symbol GMX and on the OTC under the ticker symbol GLBXF. So first off, are they receiving any coverage?
I couldn't find any coverage, and it
Okay.
took a lot of work to try to understand this company. I was
Okay.
initially drawn to it because I looked at their financial numbers, came up on a screen. But after coming to understand it, I spent hours and hours and hours on it. I just became absolutely fascinated.
Okay, good to know. So things we learned or have learned about mining company is timing is everything. And I think anybody that follows this space is like, well, no kidding, obviously. But even if you're right, when it comes to mining companies, they still are going to face a lot of challenges. You want to explain further on what I mean by this?
There's a number of challenges with mining. The first one is what everyone thinks of. Is you want to find a deposit and then you have to prove up the deposit by doing the
Correct.
proper research. Um, but then let's say you have the perfect deposit. Then the problem always is execution. How much is it
Okay.
going to cost you to be able to to be able to monetize what's in the ground? But then the second thing you have to get right is you have to time the commodity pricing. So
Hmm.
you want to make sure
Easier said
that,
than done.
yeah. So if this mine you think is going to take 3 years, it ends up taking you 5 years because the execution is hard. So you're spending more money, but then maybe the cost of the commodity when you started was high, but then potentially it goes down. So you
Right.
have to time and plan everything in an excellent way. But if you get it right, it's huge.
A lot of what ifs, but this is why mining
Yes.
is such a polarizing industry for many. So as you said,
Yep.
hard company to understand, but then once the light went off, you said this is a great company. So explain to us what interests you and what was the turning point when you did your research.
Well, this is a mineral bank. So, what do we mean by that? They have 248 properties in northern Quebec,
Okay.
mostly, that they paid for. And so these were bought at all different prices. They've been depreciated down. They're not really showing any value much on their balance sheet. And what they do is it's diversified. It's in precious metals like gold and silver. It's in specialty like manganese or rare earth, some base copper or lead metals. And what they do is they're a collector of properties, and they
Okay.
sit on them and they wait for people to come to them and say, you know what? All of a sudden, silver is high right now. I'm interested in your silver property. So what they do then is they say, okay, how about you go work my property? You spend the money. And if you find something, I want a payout or royalty based on what you do.
So AKA an incubator.
Absolutely. And so they get paid up front. So if you and I want to go work on their property, we have to pay them a quarterly rent, a significant rent. And if we do well, it's great. Everyone wins. So there's three options for them. One, you and I come mine on their property and it doesn't work. Well, they get
Yeah.
new data and they got paid. The second one is it
Hmm.
does work, but our timing is wrong. Well, they still get new data and get paid. If you and I are great mining engineers and we score big time, the company gets a payoff as well.
So risk
So
is
it's
taken off
almost
the table for
de-risked mining. Absolutely.
248 properties, you said, in northern Quebec?
And they own them. So they have cash sitting in the bank. They own these properties. They have some public securities that they've been given. And
Yeah.
if someone wants their help, they can lend them the property. They can also sell some services to them. And they just go around and they buy properties when that metal is completely out of flavor.
Wow.
And then they just sit on it and they just wait.
Yeah, no kidding. Pays to own land, which is the
Yeah.
common theme here in our first and third stocks here tonight. Okay, let's move now to the charts. What'd you find as far as revenue growth over the last 12 months?
Yeah, so their revenue, they're keeping the lights on. If they don't have a score, they still have annual revenue from the previous years. They had $4.4 million in the last 12 months. And their revenue has been growing as well, slowly, except for the years that they have the big score. And that's what people want to own the company for.
So, like these transactions, when they hit big in mining, these aren't happening every year. These happen every couple of years or maybe even longer. But if you looked at, say, the last 5 years, is there any one year that's brought your attention that where they, like you said, hit one of these big opportunities? And if so, what was it?
Well, their December 2021 financials had
Yeah.
revenue of $35 million.
Okay. So a big difference.
Yeah, so that's almost a 10x off the normal revenue. So you can see
So,
when they have these, they have a score, and then they go out and just buy more properties in the business.
yeah. So that was 2.5 years ago. All right. Let's now shift to levered free cash flow. What'd you find?
Yeah, so last year, $2.8 million. So there's no
Okay.
concerns about them having to, they're losing money sitting there. And the year before that was 1.7.
Okay. Net income was what?
3.1 million. So what's so interesting too is in that net income there is no property appreciation. Being Canadians, they
Ah,
have the right to be able to go to their auditor and say, we want to mark up the properties based on an appraisal.
yeah.
But interesting comment from the CEO, with owning all these properties, every single property they would have to go out and get a third party opinion on to bring to their auditor. And they're just like, the cost is just not worth it. We're just going to leave the properties at a low value on the balance sheet and just wait on this. So the properties are extremely artificially mispriced on the balance sheet for the positive.
What are some of the hot commodities in northern Quebec right now? Uranium? Is it lithium? Is it copper? Like you see a lot of these manufacturing automotive companies that are getting more and more involved with this space. But if you've got 248 properties, like this is definitely a strong focal point in this area for this industry. And really, it's not just about mining. It's about a lot of the, environment, initiatives that are being taken place by different governments and countries. And most importantly, let's just face it, whether you agree or disagree, accept it or not, electric vehicles are a thing of the future.
Yeah, so they have all kinds of different metals that are moving at different prices at different times. But even just on the most basic level, right now we are at multi-year highs of gold and silver.
Yeah, of course. Yep. Times are changing. All right. Final thing, credit score. What'd you find?
Yeah, so their credit score was 54.3. This was the highest
54.
that we've seen. It's because they're sitting on
54.3.
so much cash. And so they have current assets. So that's liquid assets of
Yeah, yeah, yeah.
$28 million. So and they
Wow.
have and every year they got money coming in above. They're not spending money on these properties. So there's no issue with their credit at all.
Arns, roll the siren. 54.3 credit score. That is an all-time high. Ooh, give me a sound effect for that, Arns. Okay, buddy? Let me hear it. All right. Hey, everyone. Thanks for watching our latest podcast. What'd you all think? Is there any information that we're missing? Is there anything you want us to cover? As these industries heat up, we're getting access to more and more big hosts. So let us know the questions that you want us to ask for you. As usual, smash that like button. We want this to go viral. Click on that bell for all notifications for the latest interviews that we're doing. And as usual, let's build this community. Subscribe to our channel because we appreciate it, because we wouldn't be here without you. Thanks for watching, everyone.